Situation is Josh Hodgson, Senior Associate at H2 Gambling Capital. And Josh, please make your way to the stage. I think we are very curious to hear from you today. Thank you very much. Hadn't seen you yet. How are you?
Good to see you.
The stage is yours.
Thank you.
There's a clicker on stage. That's
Perfect.
all yours. Thank you.
Thank you very much.
Yes. It's also in front of you.
Ah, great, thanks. Thank you very much for the whole Gaming Holland team and for Willem for having us. So without further ado, who are we and what do we do? So I'm Josh Hodgson. I'm from H2 Gambling Capital. We're industry analysts and we track market data, regulatory information, company information, trends, and everything to do with the gambling industry to provide our subscribers with a complete view of the global gambling market to base their analysis and decision-making on. So, clicker feels about as wake as I do at the minute, unfortunately. So, today we're going to provide an update on the analysis of the Dutch online gambling market, and you may be able to tell from the sensationalist title of Make or Break. We're going to talk about the recent legislative proposals and the impact these could have on the legal online gambling market in Holland. So I'm going to rattle through these slides fairly quickly, but if you'd like to give me your card afterwards, I can give you a copy of the presentation if you'd like to go through any of the numbers. So looking at the overall growth of the global gambling market, to start on a macro trend, the global trend is pulling ahead of the European trend, which is due to growth in newly regulated markets and more international markets coming onshore. So Europe, on the other hand, is more mature and facing regulatory headwinds in a lot of markets. So these are slowing the rate of growth, but it still continues to grow strongly. So looking at Europe specifically, the online market continues to grow strongly, with 41% of gross win in 2024 coming from online, compared to 26% globally. And breaking down the performance of the European market into the land-based and online sectors really shows where the growth is coming from. Whilst the land-based market is only forecast to grow at a compound annual rate of 1.9%, online continues its steep trajectory at 7.7%. And looking at the percentage of the online market that is channeled onshore, in Europe, the average is currently 80%. This time last year, our forecast projected that this would grow up to 89% by 2029. However, as a result of the announcement of regulatory changes in many key markets over the past 12 months, we're now expecting the onshore rate to top out at 83% in the coming years. So now we're going to look at the Dutch market specifically. So looking at the overall growth of the Dutch regulated market, we expect a gross win of 1.5 billion euros in the online sector. This will increase to almost 2.2 billion by 2029, which is a compound annual growth rate of 7.3%, whilst the offshore market continues to shrink. However, there are a number of potential caveats to this that would change this outlook entirely, which we'll go into shortly. So this currently translates to a channelization rate of 88% this year, so which under the current regulatory framework, there's the caveat again, we expect this could increase to 93% by 2029, which would put the Dutch market as one of the leading European markets for channelization. So it's important to note there's different ways of looking at channelization. The KSA uses data showing onshore player figures from registered account numbers, and there's been a number of reports that have used surveys to reach slightly different figures of people who've used onshore sites. So our channelization numbers refer to revenue rather than player numbers, and from our research, we see that offshore players typically have a higher spend per account than onshore players, which is why our numbers appear slightly lower, but we do feel this matches the number of players. So moving on to have a look at the market share in the Dutch market, we can see that there's major shifts in the pre-regulation share in 2020 to the share last year in 2023. So Unibet remains in the #1 spot, but they've lost a significant amount of share from the market, with the biggest gainers being Bet365, BetCity, and Toto. Now looking at the share of the market in terms of products, the total Dutch gambling market, we expect a gross win of 4.29 billion in 2024. The land-based market has bounced back to around 92% of its pre-COVID revenue, but we expect that onward growth has flattened going forward, and we don't expect it to return to its pre-COVID highs by 2029. So this trend will see a significant shift in the share that each sector contributes to the total market. Land-based has fallen from 75% in 2029 to 53% this year, and it will be down to 46% by 2029 if the current trend continues. The offshore online sector is also losing further share, whilst the onshore sector continues to grow and take share from both under the current regulatory framework. Now, for the caveats. So we're going to take a closer look at the potential impact of the key regulatory changes and proposals on the Dutch online market. So I'm not going to go through these, as I'm sure you're all very aware of what's proposed, but diving into the impact of the untargeted advertising ban first. So this came into effect in July 2023, and trying to assess what impact that had on the market is fairly tricky, given the amount of noise in a newly regulated market in terms of data. But if we look only at the total monthly gross win of the online market, we note that the growth rate in the first half of 23 averaged 49%, whereas in the second half of the year, it came in at 16%, which, whilst it is lower, is still strong growth. However, this view is relatively simplistic, and it doesn't account for the timing of other market-moving variables, of which there are many, such as the launch of Kindred into the market, which will have a significant impact on overall gross revenue in any given month. So we feel a better way to look at the impact is to look at the average nominal gross win across the timeframes. This smooths out any monthly fluctuations. And looking at the second half of 2022, the nominal gross win per month averaged 100 million euros, which grew by 15% to 115 million euros in the first half of 2023. Then following the start of the advertising restrictions, this growth completely stagnated, and the gross win per month for the second half of 23 was just 0.5% higher at 116 million. So whilst it's very difficult to isolate the exact impact of one change just from gross win data alone, we do feel that the changes did have an impact in this, whilst there were other factors that could have had an effect. So moving on to the introduction of the deposit limits. So as you all know, the maximum deposit limit for players over 24 will be capped at 700 euros per month and 300 euros for players under 24. Research conducted on player responses to the 1,000 euro deposit limit in Germany confirmed consensus thinking that a large proportion of players that reach the monthly deposit limit continue to gamble through other sites. So unsurprisingly, these players were also found to wager significantly more, and our data suggests that in some markets, the top 5% of players can account for over 60% of total market gross win. So therefore, with the risk of the deposit limit, it would not take a large proportion of the players to move offshore to significantly increase the size of the offshore market. However, we do note that operators will be permitted to allow players to deposit more if it's deemed that they can afford to do so. So you would expect that how frictionless the affordability checks are would have a significant impact on the potential loss of higher spend players to offshore operators, which is a similar challenge as we're looking at in the UK as well. So now for the big one, on the proposed ban on online high-risk games or slots. So online slot games account for 83% of the Dutch onshore iCasino market and 55% of the total onshore online gambling vertical when you include betting. So a complete ban of this vertical would be catastrophic for onshore market channelization, and that's not just in the casino vertical, as our findings from other markets show that players often migrate all activity to offshore operators if there is a ban on one major vertical. So to illustrate this, we're going to take a look at Germany as a case study. And why Germany? It's because it has a similar propensity to gamble as the Netherlands, and we can see that in the near identical land-based gambling spend per adult. It regulated online at a similar time. The regulatory framework imposes a 1,000 euro per month deposit limit, has a high tax burden, and a £1 maximum slot stake. So that's not even a total ban on slots, so we'll keep that in mind. So looking at the estimated German onshore online gambling gross win, This is down 46% over the first 4 months of this year compared to the same period in 2020 post-launch, when we would expect that we would be seeing much stronger growth under good regulation. This is taken from tax data reported by the tax authority in Germany, which we translate to gross win. The onshore online gambling spend per adult is 82% lower in Germany than it is in the Netherlands. And the Netherlands isn't a particularly exceptional market at the minute. It comes in relatively average compared to a lot of other well-regulated European markets, at around 123 euros per month. So now looking at the onshore channelization rate, so the percentage of players that gamble onshore in the Netherlands as opposed to with offshore operators. The German online channelization rate is roughly half that of a well-regulated European market at 51%. So these data points stand as a stark warning as to the effect that a slot ban and other regulations could have on the Dutch market. We feel that a complete ban would likely have a greater impact than has been had in Germany, and the onshore channelization rate could drop below the 50%. So moving on to the proposed complete online gambling advertising ban, we don't expect this would have anywhere near the same impact as the online slot ban, but it would still be a consideration, especially in combination with other factors. But data in Italy and Spain post their advertising ban showed that the onshore market can still grow going forward. But one of the areas that ad bans would be significantly important would be to new entrants in the market who have a tougher time to gain any share and will likely impact market share considerably. And finally, we come to the proposed increase in gambling tax of 7.3%. So a number of other speakers have touched on this before, and I would echo what they'd say in terms of the issues with this being levied on gross win means it could have a significant impact on the competitiveness of onshore products. So bookmakers would likely not be able to offer as competitive odds as their offshore rivals, and operators would be squeezed on bonusing, where offshore operators could benefit significantly from targeting higher spend players, which again could have a proportionally greater impact on offshore revenue channelization. So jumping to the conclusions. The Dutch market is growing strongly under the current regulations, so the onshore online market is continuing to take share at the expense of offshore operators, and it's currently on track for one of the highest channelization rates in Europe with the confirmed regulatory changes in place. So the proposed online slots ban would be catastrophic for the regulated market. The advertising restrictions would make market entry more difficult for new operators, and it could lead to further market shifts in favor of land-based brands and incumbent operators. And it's critical that politicians understand the potential impacts of overly restricted and prohibitive policies on the effectiveness of a healthy onshore market. And that's everything from the presentation. So yeah, thank you very much for listening. And please give me a card if you'd like any of the slides or you have any more detailed questions.